Data released today by the Swiss National Bank showed Swiss foreign currency reserves rose in August. I'm joined down the line today by George Dorgan, financial consultant at Steger Financial Consulting in Switzerland, to discuss the longevity of the strong currency and the future of Swiss GDP. Mr. Dorgan, thank you for joining me. Against the backdrop of Eurozone volatility, it looks certain that Switzerland's central bank will be active in forex markets for some time to come. Why is the Swiss economy so strong?
Let's start maybe with the long-term factors. In these long-term factors, you can see that 5 factors are important. The original factors are labor, which are, for example, in India and China, very strong, and in Eastern Europe, where cheap labor is available. Then you have capital, which is available in the US, in the UK, in Switzerland, Germany, and Japan. And we have most recently lived a commodity cycle where commodities have become very important. Commodity countries like Australia and Brazil. What still is becoming more and more important is human capital. Human capital is available in the US, but rather at university level. You have human capital which is available in Sweden, Germany, and Japan, but also and especially in Switzerland, where many highly educated immigrants are moving to Switzerland. And the 5th factor we consider is tax and infrastructure. And tax and infrastructure is becoming more and more important, especially with the debt situation in many countries. And 2 countries which are very competitive for tax and infrastructure is Switzerland and Singapore. In Switzerland, you have very wealthy immigrants who are leaving the Eurozone to live in Switzerland to avoid European taxes. And you have many well-educated expats who pay high taxes as well.
Currently, the Swiss National Bank believes the Swiss franc is overvalued. Would you agree?
Right. Let's take a look on the long-term US dollar Swiss franc chart. If you look at this long-term chart, you can see these long-term factors we were speaking of, they're still valid, and the Swiss has always been appreciating over the time against the US dollar. If we look at trade-weighted real effective exchange rate, which is provided by the SNB, you can see the SNB claiming that Swissy has to devalue again and come back to the levels of 1999. But this is not the case. The trade-weighted real effective exchange rate must rise with the time. Long-term tendency, you can see a certain period when the Swissy was undervalued, and the Swissy was undervalued between 2005 or 2004 and 2010. Only most recently, last year, the Swissy has become very strong and overvalued again in 2011. We see the peak at parity here in 2011. We think that due to the long-term factors we were speaking of before, the debt situation in European countries and in the US, this long-term real effective exchange rate the linear trend line must become even steeper with the time. Can you see the red line here? We think that this curve must be even steeper now, because the debt situation will not get better with the time.
I see, and it only costs around 1.20 Swiss francs to buy a euro at the moment. When do you see the strong Swiss franc to end, and what are the preconditions?
Our prediction is that it is actually not a strength, it's the correct value. 120 for us is currently not an overvaluation, it's the correct value. As for consumer prices and purchasing parity.
What is the development of FX reserves compared with the exchange rate of the euro-Swiss franc?
If we go back to the year 2007, see that the exchange rate euro-Swiss was 160. Then the financial crisis started in the US, and the euro-Swiss went down to 150 in 2009. What happened after that was that with the time the Swissy appreciated, because the Swiss economy was behaving better. So the Swissy appreciated to 140, FX reserves went down at the SNB, and then in 2010 the euro crisis broke out for the first time with the Greek crisis, and the SNB had to buy reserves and could not stop the appreciation of the Swissy at the long term. It went up to in May 2010 from 200 to 300 billion Swiss francs, but they could not push the euro upwards. Then inflation came up again, and the reserves went a little bit down. They were able to sterilize. They were able to sell some euros, but the euro Swiss went down to 110, and they just could sell about 50 billion reserves, but they lost about 30% of the exchange rate. Then in 2011, September 2011, they pushed down the exchange rate to 120 at a very high cost. And at the same time, the same thing happened in 2012, in May and June. They had to push the reserves further upwards, and still they could not manage to go over 120. This pattern will repeat, and at the end we might come down to parity or even less.
Swiss unemployment rate rose to 2.8% in August from 2.7% in July. Is this what you were expecting?
You have to see that the Swiss unemployment rate is nearly at record level, record low level, but it is nearly at a record high level in the European nations. So, yes, there is a certain contagion from the European crisis to Switzerland. This happens. But it's no long-term risk for the Swiss economy, because it's not that dependent as for exports, for example, on the European economy. It exports, 20% of exports going to the United States, 20% in other countries. If there is a global crisis, yes, the Swissy might appreciate. Yes, but if there is no global crisis, the Swissy can only appreciate with the time.
Hurt by lower engineering and chemical exports, as well as companies' reduced spending, Switzerland's gross domestic product shrank by 0.1% in the second quarter, after expanding in the previous 2 quarters. Why is this, and what do you see for the future of Swiss GDP? I
was a little bit surprised seeing this loss of 0.1%. I thought previously that the 0.7 in the first quarter was a little bit too high as compared to retail sales and cost numbers. So I'm not surprised that the first quarter went down from 0.7 to 0.5. But I think that the second quarter will be revised upwards this time. So I expect that the second quarter will be revised upwards, because unemployment is low, the cost factor is quite strong, and the current account is strong as well.
Thank you, Mr. Dorgan, for those interesting insights and comments. For more interviews and updates, just click back to the Dukascopy website. For now, take care.